Good morning, everyone. Welcome back to our stock market weekly brief. And the question for this week is: are we going to hit all-time highs, or market is going to continue to tighten up in a range, or is going to make that daily higher low and go higher high? So we'll take a look at the technical analysis overall on QQQ, S&P 500, and the seven mega cap techs to give us more clues to see where market potentially will head to later next week. So before we get starting on the technical charts and everything, let's take a look at the data real quick. So fear and greed index right now, fear it's 39. So give me slightly of a bull edge at the moment, not that much. So we take a look at the AI sentiment data as well. You can see that we have a lot of shift into the bearishness this week. So it is giving us a little bit more of a bull edge. We're kind of climbing the wall of worry overall. As you can see, we were at 43 bullish just 2 weeks ago, 41 last week. And all of a sudden this week, we get to 33s, right? And you can see this bearishness just kind of like climbing up 29, 34. Now we're at 42. So we are getting a little bit slight shift to the bear side a little bit too much. But we still want to see, that price action showing us that at the moment. We're getting all these earnings coming in, right? Google last week dropped 7%. Market still went up next day. All these Apple as well reported as well, and then market's up the next day. Except for Amazon on Friday, obviously we dropped overall in the market. But overall, there's not much earnings for me anymore to look at. A little bit of semis, right, on semiconductors here, and SMCI here will give us more insights into semis and AIs. And that for crypto, Coinbase, and yeah, that's about it. Not that much unless you're in one of these stocks. Take a look at the data. So there's not much data here, just Fed Powell testifying Monday and Tuesday. And we have CPI and PPI pretty much Wednesday and Thursday. So that's about it for me. Those would move the market the most. If it comes in not too long, initial job claims will move the market as well if it comes in a little bit out of where it's predicted. That's about it. All right, let's take a look at the charts. So QQQ here is pretty much just hitting its resistance, right? Resistance, very clear resistance, 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 and we touched it again. So it's been rejecting from here 5 times so far, and every time you see these, right, this was a deep seek drop, and we just pretty much climbed all the way up, and then we're almost there, and the next thing we know, we had another tariff news, right? And this is the tariff drop, and then now we're almost there again, and we think we got another kind of slightly tariff news again on Friday, but not as much as of a drop as we had last time. But for now, if the question is, can this, can this be the higher low here and make the higher high? So if bulls are able to hold Friday's low, then there's no red flags, right? Let's just take a look here. Top of the move to the bottom of the move, right? We pretty much only retrace about 40%-ish, right? So still in bull's favor at the moment. We haven't really crossed the 50% mark. So if this drop was a lot bigger, right, and we cross 50% mark like this, then I'm going to give bears their lean when we get that bounce. And potentially we head lower here, and then probably retest this bottom of the range again, right? But for now, I would say we'll still slightly bull lean at the moment. But if let's say we've made a leg down, then we're probably looking down at closer to this range. So we'll take a see if it shapes up. Bare minimum for me, I want to see at least a 4-hour downtrend for me to be more convincing to say that bears are going to test the bottom of this range. If we crack through this one, we're looking down closer to the bottom second range down here overall for me. So get S&P 500. So SPY, similar idea, right? Rejection, rejection, rejection. But this is pretty much more like an all-time high, just rejection, 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 rejection. So similar idea. So when Qs and SPY both hit resistance, you want to be a little bit more cautious. We're likely getting a pullback. Doesn't mean we're going to pull back all the way down here or whatever it is. But an initial pullback makes sense, right? We were up pretty much every day of the week and into right? Strong resistance, right into strong resistance, 4 days up. So it does make perfect sense. We get that pullback on Friday. And the question is, can the bulls play defense here, right? We don't want to make a lower low. So this is a higher low, and then lower high, lower high, lower high. So it's pretty much a tiny range at the moment. But are we going to retest the back of this range? Or this time, bulls can actually hold this level? Similar idea, make higher low, and then back test it, make higher high, and finally breaking out of this level on this all-time high structure. But if we can get that 4-hour downtrend, right, get a weak bounce, and confirm 4-hour downtrend, yeah, then we're looking back down to these tiny range level again, and potentially back tests these levels low, right? This is pretty much just a range bound market. At this moment, very clear range bound market. So if we start to see, 4-hour trends confirming, then we're back down looking at the lower bottom side of these ranges at the moment. So let's take a look at the rest of the 7 meg cap: Meta, Tesla, Amazon, Google, Microsoft, Apple, and Nvidia, just to give us more clues to see where if markets are going to give us more weakness, or we may get a bounce here. So in terms of a Meta, really no red flags at the moment, right? All-time high. There's never any red flags for all-time high because there is no resistance. It's just price discovery. But you can argue that, okay, so Meta is really overbought, and what if it starts pulling back, right? Then market is going to become weaker with it overall. So, even if Meta just does a very healthy consolidation, right, just healthy pullback, even if it's a daily bull flag, let's just say it's a daily bull flag, right, pulls back all the way to here, that's like a 5.5% drop, right? That's going to definitely weigh on the market, even if this is a daily bull flag. So you got to be a little bit cautious here overall in terms of Meta, but overall, 0 red flags, right? Let's go pull back here, and then maybe we can just go sideways, bull flag here, and then next thing you know, right, higher highs. So at this moment, Meta, really no red flags. Even if it comes back all the way here, for me, it's still fine. It's just back testing prior resistance. Not necessarily active support, right? We just go like this, and then boom. So red flag for me would be if we come all the way down here, bounce, weak bounce, and cut through these demand zones. That would be a huge red flag for me. Then this would be more like a kind of like a blow off top. But for now, no signs of that yet at this moment. We are getting a lot of upper wicks, right, in these levels, all these upper wicks. So gotta be a little bit cautious being bull up these levels. And Tesla broke. Let's get broke some tiny range. So support. So it looks like it broke right here, and we're getting a little bit of follow through. It's looking more like a falling wedge at the moment. Let's see. Yeah, you could call that a falling wedge, but I wouldn't bet on it. But overall, we are testing this structure. So if we bounce from this structure, then bulls are a-okay because because we're still affirming that we haven't cut through these levels yet. If we get like something like this, breakdown, bounce, and now this level structure is going to act as resistance, and then go lower like that, that's a huge red flag at the moment. So we want to see this structure right now act as support because the price is above it, and ideally we bounce nothing prior to 347. So we don't want to break through 347. We want to see that maybe we get something like this, breakdown of that rising falling wedge as a fake out, and then we get that lower wick come in, and we close within it in the pattern, and then we bounce from there. Overall, that would be the good sign for bulls. Best case for bulls, bounce right here on Monday, crack through here, and then be a bull break for long wedge. Because even not the weekly, right? It looks perfectly fine on this bounce. Literally, let's see from here. It's we did retrace about 45% of this whole move, but On the weekly, it still looks fine overall if we do start bouncing from here. If we start cracking through the here, then that's a red flag because that will be retracing over 50%, and that will start favoring the bears on even on the weekly chart. But for now, weekly still favors the bulls, and let's see if the bulls show up on the daily chart and see if we can break through here. Potentially get maybe a bull break on here on the outside here. Doesn't mean we're gonna bull break all the way, come up here, and then go higher. At least we'll get a bull break and see if bulls can break these prior pivots of these rising wedge and test these levels. Obviously, depends on the market as well. If the Qs break the all-time highs, then there's a good chance Tesla's going to break bull on the right falling wedge. All right, so Amazon reported earnings on Thursday, and it dropped 4%. So we're still trading within here. Just this longer term rising wedge, no red flags, right? Rejection, 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 rejection. Bounce, 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 bounce. So yeah, still in the big picture, really big rising wedge. But overall, I would say there is a lot of cluster of volume traded here. So now we're beneath it, and what we want to see is we come back to here as soon as we can. But we are holding above this structure where we break out from, so that's okay. We're still a-okay at the moment. Last thing we need is something like this, like a head and shoulders. Where if we come all the way down here, then we're looking for head and shoulders. Probably on like the 3-day or the weekly, more clear. Yeah, seem a lot more clear here on the weekly. So bulls definitely want to hold above this structure right here, above 224 levels, so we don't get that weekly head and shoulders forming. Overall, best case is we come here and we go something like this sideways range, where it forms a tightening range, cool things off, and then you head higher. But for now, we are below the all-time high structure, so this structure is acting as resistance at the moment. See the 4-hour trend here. No 4-hour trend. We have to. So ideally, bulls want to hold this reaction low, the earnings reaction low, and they'll be fine. If they start cracking through the earnings reaction low, then that's starting to shape up red flags. And Google, similar idea, right? Bad earnings reaction, and then we actually got follow through here. So this whole structure here now is acting as resistance. So this is what we don't want to see on Amazon. So similar idea, right? Get a bearish reaction. Now earnings were below the structure, and it acts as resistance, right? Wednesday we can get over it. Thursday we can get over it, and then next thing you know, we sold off because of this level of this resistance. And now we're looking down back to this structure. So bulls ideally want to hold above 117. If we come all the way down here, that's the last level they want to hold, which is just this prior level. And yeah, bulls want to, bears crack through here, make a lower high, then make a lower low, and you back to test 166. That'll be the best case for you guys. Yeah, for bulls, looks like excuse me, 4-hour EMA 12 is acting as resistance, and you want to crack through back above 191. Just this complete sideways rejection here. This 191 rejection is pretty much the low of this structure. Very clear. So if you guys can crack through above 191, that'll be a really good sign for bulls that there's no red flags at the moment. If you guys can do that. So yeah, so there's a couple levels we're looking at. All right, let's take a look at Microsoft. So Microsoft's just still range bounding. Pretty much obviously the biggest red flags out of all mega cap tech would be Microsoft. Resistance, support. Been range bounding since January 2024. It's been a whole year, and now we're testing the bottom of the range. So bulls, you definitely want to hold here, at least above 404, around these levels. Maybe something like, poke down and then no follow through bounce, and now we're just continuing to range round if it does that. But for bears, if you can crack through this 400 psychological level and get follow through, right, and now it's stuck in resistance, then market is probably gonna continue to range bound as well, because that would put a lot of weight down in the market. 4%, yeah. But so far, we are kind of holding this reaction low. As long as we hold this reaction low, then we should be okay for bulls. So bulls need to show up pretty much on Monday for a lot of these names. Otherwise, if we can make another couple legs down, then it's going to shape up some red flags. And look at Apple here. So this move now we talked about last week is a red flag where we give everything back. And this is just the lower high. And after this move, we're talking about just probably in a range bound. So it's pretty much what it's doing at the moment. So we'll wait for this tiny range to break, and we'll see which way it ends up breaking at the moment. But if as long as bulls hold above this low, this 119 low, which is this low, which is pretty much the low of the structure, we should be fine. But if we start cracking through this low, there's not a lot of support, really. If you look at this, right? Look at this move here. Just not a lot of volume. Even this here, not a lot of volume. As you can see, no volume here. Barely in volume. So if we crack through this 119 low, there's a lot of space for bears to work with in between here and here. So bulls definitely need to hold this level. But for now, it's still continue to tighten up. Once it's finished tightening up, ideally, best case for bulls, you just go sideways here, like that, and form some kind of a support, affirming this, becoming still support, and then go ahead up higher. But it's starting to shaping up a little bit like distribution zone. If this, we give it all back, right, and this goes sideways, and then we crack through here, and then this whole thing was just this distribution zone here. So that would be a red flag for me. So make sure to keep an eye watch on this, how it ends up shaping up. Because if this goes below 219, market's going to probably test the bottom of its range again. Very likely going to test the bottom of this range for Qs, and bottom of the range for the S&P 500. If, all these guys start to shape up these red flags. All right, so look at Nvidia. So, after the DeepSeek drop, we got a bear flag right here. Bear break, zero follow through, right here. When you get zero follow through, that means the other side is coming back. So after we get that bear break, zero follow through, right at support, then Nvidia bulls just took over. 1, 2, 3, 4 days in green. This pretty much held up the market overall. And we are back testing this structure though. So I wouldn't be surprised if Nvidia get like a one red day or two. Just even a healthy pullback, right? Get a bull flag here and see if we can hit higher. Because we are testing this 131 structure right here, where we bounce from a lot of times, right? Rejection here, and then now it's acting as support. This structure that I talked about here a lot. So we are kind of back testing this structure now. So let's see. Best case, we just blow through it and go like that. And then now we act as support, and then we bounce like that. Best case for bulls. For bears, right, you want to see this reject and give it all the way back. That'll be the best case for you guys. But the most likely scenario is probably a rejection there. And let's see if it's a shallow pullback, then that could be potential bear bull flag and then head higher. Also depends on the market overall as well. If it's just Nvidia bouncing here, right, and everybody else, all 6 of them, all the 7 mega cap techs are dropping, right, it's not going to help. So, and the Qs are dropping because of that. Next thing you know, we try to break out and then we just roll over, right? So we have to see what the other guys are doing as well. But for now, definitely Nvidia relative strength compared to everyone else at this moment. Yeah, so overall the market, right, we'll have to take a look to see if those mega cap techs can get that higher low bounce, and then we get that bounce, then we have a good chance we can potentially break this tightening range. But if we decide to get another leg down, consolidate more, right, go sideways, range bound a little bit more, then we're probably going to come down and then continue to just tighten up, which is annoying, but it's what it is. We're currently in the range bound market, so Just be wary of that. If you guys have any questions, feel free to comment, like, and share. Keep a comment below, and feel free to like and share and subscribe. If you guys made it this far, learn anything, and if you guys are looking for one-on-ones, take a look at the Patreon link. If you guys are learning more about TA and how to better chart your analysis or trade, or psychology of trading as well, take a look at that, or just book the 15-minute free call, and just talk more about it. And I'll do the commodities update tomorrow. Have a great rest of you guys' weekend.